Hello, I'm Georgina Jalbo from Lexis PSL Private Client, and I'm joined today by Chris Moakes, a tax senior associate at PwC, and Chris is going to provide us with an overview of the Enterprise Investment Scheme. So thanks for coming in, Chris.
No problem.
Could you start by just briefly explaining the background to the Enterprise Investment Scheme?
Absolutely. So the Enterprise Investment Scheme was introduced about 20 years ago to replace the Business Expansion Scheme. The primary purpose of the scheme is to help bridge the funding gap for small and medium-sized entities. Specifically, it's been introduced to stimulate investment in unquoted trading companies. Now, obviously, there's an inherent risk in investing in these sort of entities, and in order to stimulate that investment, there are some tax reliefs available for the investor. And there's also some other types of venture capital tax relief that are available. Specifically, there's the Seed Enterprise Investment Scheme, which gives slightly more generous tax reliefs, but is only available for very small companies. And there's also venture capital trusts, which are listed vehicles that use similar types of investment.
Okay. And what are the tax reliefs available to an investor subscribing for shares through the Enterprise Investment Scheme?
Well, there's four primary tax reliefs. The first one is income tax relief of up to 30% on an investment maximum of £1 million per year. So that is effectively income tax relief of up to £300,000 annually. Now, that relief I say up to is because you can't exceed the amount of tax you've paid in a certain year. The second tax relief is a capital gains tax exemption on disposal of EIS shares. Now, for both the income tax relief and the capital gains tax exemption, you do have to hold any EIS shares for over 3 years. But the other reliefs don't have that same requirement. The first other one is a deferral of capital gains tax. Now, that's available for any capital gains that you have incurred up to 1 year previous to the investment, and also up to 3 years after your investment's been made. And finally, there is another relief called terminal loss relief. Now, terminal loss relief is there to, again, restrict the amount of risk you're taking on these investments. Effectively, it gives you an income tax relief boost where your investment's made a loss on disposal. And for example, where your investment goes bankrupt and you're a higher rate taxpayer at 45% currently, you would actually get tax relief of 61.5% on whatever investment you make initially.
Right. Well, those reliefs sound very generous for investors. Are there any limitations on the type of investment that can be made?
There are some, and obviously the government wants to tailor the way you invest to the right type of company. And in order to do that, they do restrict the type of companies that you can invest into, and certain trades are excluded. For example, though, an example is anything asset-backed tends to have some exclusions attached to it. But it is worth saying that typically an unquoted trading company will qualify for these sort of schemes. As well as that, there are some restrictions on the size of company that you can invest into. As I mentioned earlier, it is specifically introduced for small and medium-sized enterprises, and therefore there are limits on the amount of gross assets a company can have, and also on the number of employees that the company can have. As well as the conditions relating to the company itself, there are some investor-related conditions for the individual. And for example, there are also some other conditions on the way you can make an investment. For example, you can't have a preferential right to dividends. And again, that's in place to make sure that you are bearing some risk when you're making these investments. As clearly you're getting some nice benefits on the outset, the government wants to, or HMRC wants to tailor the way you're investing to the right sort of way, so you bear that risk.
Okay. And I understand that there's been some uncertainty recently due to changes in the legislation. Yeah. Can you provide any insight into this?
Sure, and I think it's worth saying up front that the rules that underlie the Enterprise Investment Scheme are subject to EU state aid guidelines, and one of the reasons behind the changes in the underlying rules is because these EU state aid guidelines were amended in 2014. The amendments are relatively significant, and they've introduced some new limits. For example, there is now an investment limit on the amount that a company can receive over its lifetime, which has never been in place before. There have been annual limits, but now there's a limit there as well. Now that's prompted HMRC to make some changes to the underlying legislation because it has to comply with these EU state aid guidelines. Now the changes that HMRC have proposed are considerably more generous than the existing EU guidelines, and for example, on the investment limit, the HMRC has proposed a £15 million limit compared to the EU guidelines, which has a €15 million limit. And because the limits don't completely link up, there's a requirement for them to go through a process of getting it approved by the EU Commission. That approval's ongoing at the moment, and there's been some discussions that began in March 2015, and we're expecting them to continue into the late summer at the very earliest, and potentially falling later in the year, unfortunately, than that. And this has caused some uncertainty in the industry because there is a difference in the rules that HMRC has proposed and the ones that are under the EU guidelines. And effectively, the issue will happen is if the HMRC's proposed rules are not approved by the EU, any investments which exceed the EU guidelines could have their tax relief withdrawn, or the company itself could become a non-qualifying company for the purposes of venture capital trusts, for example.
Okay. So who should consider exploring the EIS further?
Well, I think lots of people. I don't think it's quite as well known as many people think, but if you have an investor who's looking to make an investment into an early stage company, specifically anyone in unquoted companies, I think this is an interesting piece for them to look at. Secondly, if you have an individual who's recently made a capital gain or is expecting to make a capital gain in the future, there's clearly an opportunity here for them to consider rolling that over into a new investment and deferring any capital gains tax they would have had to pay. And finally, I guess the scheme is in place so that SMEs can access funding more easily. And so companies that are looking to finance, to raise finance, they could be looking at this scheme to get themselves approved and market themselves as being available as an EIS qualifying investment.
Well, thank you very much, Chris. That was a very clear summary of the EIS scheme and the opportunities it can offer investors and companies. Thanks very much for coming in.
No problem. Thanks for inviting me.